Hello traders, my name is Logan with Funding Talent, and in today's video, we're going to be doing a live market forecast of the week of May 24th. So in this video, we're going to be going over the best fundamental drivers for you to keep your eye on in this upcoming week, and also the best technical setups that we're currently keeping our eye on, hopefully so you can also capitalize on them. So without any further delay, let's get right into the video. So traders, here we are getting into the slideshow this week. As always, we're going to start off with a recap of last week's trades. So, as we know, what happened with the crypto market, nobody really could have expected. We had a major sell-off last week, which could have been attributed to a lot of things. You know, nobody really knows exactly what caused it, but there's a lot of speculation around what caused the market to dip so much. But either way, we're looking at it as a retracement, and we are looking to get back into some cryptos in the near future. Nevertheless, we did get stop out on Ethereum if you were in that trade. Personally, I did not take the trade because I've had an Ethereum position from around the 1500 level. So I was personally not looking at this as an entry. And I don't think that I gave out a specific entry, but if you happen to get in on the analysis that I presented, you would have gotten stopped out. In terms of NZDJPY, the take profit was hit. DXY, the take profit is almost very close to being hit, very close. USDCHF is consolidating, and gold is working out very well still. So let's get into the fundamental drivers. For this week, the only day that you really have to worry about is Tuesday and Thursday. NZD news at 10 p.m. and 11 p.m. on Tuesday. And that is EST. And then on Thursday, we have some USD news at 8:30 a.m. Besides that, not too much to be worried about. There was some good economic news this morning's survey data for the Euro area and the UK showed a rebound in services, helped push the May Composite Purchasing Managers Index, that was a mouthload, for the Euro area up to 56.9 in this last month, with factories around the world showing signs of faster production. Fed Chair Powell did say that his organization will explore a central banked digital currency, which they are calling a CBDC, which will rival the Chinese digital yuan, which they are actively developing. The Fed will release a report on this CBDC in this upcoming summer. And in other news again, China once again vows to crack down on mining and trading in cryptocurrencies. This could have an enormous impact on the market if they decide to follow through. They have said this a couple times in the past, so nobody's really taking this that seriously. They've said it quite a lot of times. But if they do decide to follow through, this could have some repercussions because, as we know, China controls 65% of the Bitcoin mining nodes, which are controlled by governments around the world. So in terms of governments that have Bitcoin computational power to mine Bitcoin, China does have 65% of that available computation power. So, with the good news, I am looking at a risk on market sentiment to continue. This means expectations are higher for further economic growth. And for our veterans of this series, you will know that NZD, Canadian dollar, Australian dollar, euro, and pound appreciate in a risk on market environment. So that's the pairs we're going to be keeping our eye on. And hopefully we can see this risk on market environment continue to play out. Because the risk on environment just means that the economy is doing well. People are willing to put their money into riskier assets in terms of a more favorable return. Moving into the technical analysis of this week, we are looking at DXY right now. So we were around this level as of last week's analysis, and I did say that we could come down to the support fractal, which we are getting closer to. And if you were short this pair, or short really any pair with $1, you would have been making money. So this has been working out well, and we're going to continue to see some follow through in this in the next couple of weeks and days. Looking at gold, so we did not get a retracement when we thought we would, but we really didn't even close our positions, right? We just moved our stop losses to break even, as I said last week. So this is just even better for us. This actually looks much better because now what we can do is we can expect a retracement instead of down here to these levels. We can expect a retracement maybe down to this resistance turn support line and then a bounce off, maybe, or even maybe a push lower down to the top of this retracement zone before coming higher. Either way, the retracement will be less than it would be if not, and I am very still bullish on gold. So this is USDCAD. We broke out of this wedge, as you can see, and I am looking for a head and shoulders to play out on this pair. I think this is actually safe enough to be labeled as my chart of the week. I'm a big fan of USDCAD, and if we can get a break of this neckline, the trade will be valid, and I hope people get involved, because I know I will be getting involved in this upcoming week if we can get this neckline break on the 4-hour chart. So keep your eye on that, and moving into USDJPY. So this is better seen on the daily chart. So we're in this channel right now, and we are entering a corrective phase. So for our veterans of the series, as I was saying earlier, we know the corrective phases play out in 3 distinct waves. An A wave, and then a B wave, which is a retracement of that A wave, and then a further push down, which either could be a flat, meaning it stops at the same point that the A wave stopped, or it comes lower, which would make it a zigzag. Or any type of complex correction, obviously, we can get into those. But for now, I'm just looking at a flat or a zigzag, and what I'm looking for is a breakout and close on the daily chart of this channel. It looks like we kind of got that the day prior on May 20th, but we really did not. I'm looking to see in the next day or two if we can get a break and close, and then we can see a continuation to the downside on USDJPY. GBP USD, so I am looking at this as a short, and the reason for that is we're going to be breaking out of this wedge, coming off of this resistance fractal, maybe pushing down to these lower levels right here. First take profit can be set right here at the 1.38380 level, and then the next one would be set at our support fractals down here at the 1.37 level. So I am short once we get a breakout of GBP USD. So this is EuroCHF, and as of last week, I said that we're going to look for a break, and then a retest, and then a bounce off. The thing is, we never actually got an entry on this because we never confirmed a retest. It just broke straight back down. So I am actually going to be looking at this pair now as a short, possibly, once we get the daily close break of this support line right here, which looks like we definitely could get today. So be careful Monday, this might have actually already happened. But if we do not get a break, then I'm going to be looking for another continuation pattern for the upside. But remember, this C wave isn't necessarily done, right? I put these markers here, but this was just one of the possible completion points. The other completion point was the 61.8 level, so this red line is the 50 retracement. The 61.8 is around this level right here at the 1.09. So they would be a very short-term trade, but it is possible that we are not yet done our C wave. So if we get a break and close, I'm short. If we get a rejection and a move up, I am bullish. So we got a break and close on NZD-JPY. I'm going to be looking for continued downside on this pair. Not too much to be said. I am bearish on NZD-JPY. So on Bitcoin, what we're looking for right now is a 5-wave impulse move higher or a very strong move higher for people that do not really understand Elliott wave theory. All that means is we're going to look for a very large movement to the upside. And if we don't get that, that means that our corrective phase is still playing out. As we were just saying, corrective phase happens in 3 distinct waves, the A, the B, and the C. We did not get our C wave to play out yet, but what we're looking at right now is either a completion of this corrective phase is right here, right? We had an A, B, C, and then this final push down, or this is just the A wave, and then we're looking for a B and a C wave to complete a flat. So right now we're either looking for an impulse wave higher to take us into a bullish situation, or we're going to see continued consolidation and maybe a push down to these lows, which we saw prior. This is Ethereum. The same chart, it really looks the same on Bitcoin, but I'm going to be looking for these because these are the main 2 cryptocurrencies which have the highest market dominance, so these are going to be driving a lot of the altcoins that we talk about. So I am going to be looking for these 2 situations to play out. Either way, I think we're in a 4th wave, which means we have another wave higher before this bull market ends. I do not think we're done our bull market, and I think we have another wave higher before it ends. But we're looking at it short-term to medium-term, either more consolidation or a push higher. So traders, that was the market forecast of May 24th, and I hope that you guys took some value out of this video in terms of the best fundamental drivers to stay away from and the best technical setups as we were speaking about before. If you're not already following us on all of our social media platforms, be sure to do so because we're releasing new content every single day across all of our various platforms, and we'll be releasing new videos every single week on our YouTube channel, so be sure to subscribe here as well. As always, on behalf of everyone at Funding Talent, happy trading.